Hello, this is Zak Mir with a late evening look at the top traded Tiddlers for Monday the 28th of October. I spent the earlier part of the day flying around above the storm that hit the UK, so missed out on all the excitement. But Atlantic coal was a heavily traded stock today. Decent bear trap rebound off the 200-day moving average from the early part of this month at 0.18 pence. V-shaped bull flag as well, which is normally a very bullish charting configuration, and an extended April RSI uptrend line as well, based around the 50 mark. So plenty to back up Atlantic coal, including the heavy volume, and rising one-year price channel heading for 0.44 pence could be a decent end-of-year target. The stop loss, depending on how aggressive you are, would either be an end-of-day close back below the 10-day moving average at 0.23 pence, looks a little tight, or the 200-day moving average itself at 0.18 pence. So Atlantic coal looks like there's plenty there to shoot for on the upside. Moving on to Orogen Gold, we have sort of bumping along on the bottom has been the sort of the recent pattern going into the summer. We had the false break to the upside towards 0.6 pence, and then sucking all the bulls out of their positions back below the 200-day moving average, which is still falling, and actually below obviously the 50-day moving average at 0.37 pence. We have a line of support in the RSI window from the end of June, which has been tested twice during October, which adds a bit of bullish backing to the price action at the moment. And you would probably at the moment now be looking for the floor of the June price channel at 0.3 pence to hold, and a break to the upside to retest August resistance over the next month towards 0.6 pence. If you're cautious on the stock, you wait for an end of day close above the 0.37 pence 50-day moving average, but I would take a guess that the shares have done enough in the near term in terms of basing out to deliver the full or partial retest of the late August resistance. Finally, I've got SolGold, which is a favorite of mine, largely because I called it right during the initial big move to the upside in the summer. We've had the bear trap below 8 pence and below the 50-day moving average at 8.98 pence in the early part of October. That should be enough to flush out most of the week longs and deliver a new leg to the upside, even more than we've already seen, from 8 pence to 12 pence. The favoured scenario at the moment is that we'll hold above late September resistance around 10 pence, and while we do that, we'll hit the top of a May rising trend channel at 18 pence over the next 2 to 4 weeks. The overall structure here is also backed by an RSI support line, which has just been tested towards the 35 level in early October. So a decent break up here to the upside, and building on the bullishness we saw at the beginning of September. That's it for me. See you again next time.